we're going to get right into this because we only have 35 minutes and we want to do Q&A as well. So if you have questions, we've got, I'm sure many of you are familiar with the drill now, late in the day on Thursday. Thank you all for joining us. If you have any questions, scan that QR code with your QR code scanner in the app, and I'll be keeping an eye out for them. And anything that's directly related to the question that I'm going to be asking these panelists will work in. So with that, I'll do a quick introduction. We'll all do quick introductions and go right to it. I'm Daniel Turgel. I'm here with InsurTech Denver, which is a local group in Denver that I co-founded with Mark Wheeler in 2018. We do a lot of content and networking in Colorado. So if you're ever in Colorado, please look us up. On to Rahul. Cool.
Rahul Daryanani. Great to be here. Thanks all for coming. I'm an investor with Touchdown Ventures. The premise of what we do is we work with large public and private corporations to set up and then co-manage internal CVCs. So today, been around for about 8+, going on 9 years, 55 investors on the team. We work with 19 different corporations at this point across every GDP contributing sector of the economy. One of our more recent funds, the one that I help run, is a fund with Erie Insurance. That's why we're here.
Wayne Slavin, CEO and co-founder of Sure. We provide infrastructure for running an end-to-end digital insurance program. We do that for large carriers as well as Fortune 500, Global 2000 brands so that they can embed insurance into their customer experience.
Hey everyone, I'm Jimmy. I'm the co-founder and CEO of Urban Jungle. We're the biggest InsurTech in UK home insurance. So I guess here today I'm going to give a bit of a European perspective on some of these issues.
And Drew Dulesky called me this morning sick, so he couldn't join us. So sorry about that, but we've got a great panel anyway. So we're going to get right to it. Okay, first question. Usage-based insurance. Okay, usage-based auto insurance means pay how you drive. So this session, however, is called UBI and property insurance. So what does that actually mean? How do we interpret that in terms of either commercial property insurance or homeowners property insurance? Is there really such a thing? And if so, how does it work? Or should that be standing for something else? Could be a blockchain or anything else that's not necessarily usage-based, but it's a bit of a provocative term for property and perhaps undefined. Let's go around and see what our panelists think. Rahul, start with you.
Sure, thanks. It's an interesting question. So I think based or B standing for base is perfectly fine. I don't think, at least at this stage, it applies to property in the same way that it applies to automotive. I think it's less about, in the property space, I think it's less about how you use your property and more about how you maintain your property. Certainly on the personal single family resi side, and you're already seeing that with insurers offering discounts for water leak detectors, electrical damage detectors, things and sensors and things like that will pass that data back to the insurer. On the commercial side, perhaps there's a world where capacity sensors or something that monitors foot traffic gets you somewhere to that world. But again, I think by and large, it's still more how you maintain the property. And again, we've really spent time thinking about this from like the single family resi side, right? And so it's the data that if you can provide your data over to the insurers, obviously helps them in the claims and back into the underwriting loop at renewal. But again, it's more, are you taking care of your home versus are you doing something else in it?
Wayne?
I mean, based is a pretty good B word. Yeah. We know what B probably doesn't mean. Probably doesn't mean blockchain.
Hopefully.
I think it's going to be interesting both for first generation, what I would call it, 1.0 property insurance, mainly based around prevention. And that could come in, like you said, the sensors, the other pieces to it. And then I think the question is going to be around, cost reduction and passing that savings back on to a single family rental, Airbnb type owner, or to somebody who has vacant buildings, things of that sort. I think that's less 1.0, more 2.0.
Okay, Jimmy?
Yeah, so I think there's and we're going to talk a little bit today, I think, about the role of IoT in property insurance, and that's kind of how risks evolve. I guess the way I think about usage-based insurance is when in property insurance not being always on, and like your classic, property insurance is designed to be on all the time. At least in the UK, for example, your public liability insurance is rolled in, so you just have to have it on all the time. And what we're seeing, particularly in big cities like London, it's just different living models. So people renting property short term, like maybe they're just like sharing a friend's room for a week. And so from our point of view, when we think about usage-based insurance, actually short term is one of the big things, and making it super easy to switch it on when you land in London off your flight and switch it off when you take off again. So I think, it'll be good to sort of explore today a little bit of mixture of like, how do you make property insurance mold to the modern world and how people live, which I think is like certainly in auto, what we see is like the usage-based bit of auto is for people doing weird new ownership models, right? Or borrowing your friend's car or whatever it is. And I think there's a big opportunity there, but I also think there's a really interesting area around IoT that I know we're going to talk to you too.
Yeah, let's talk first then as we transition to Internet of Things, IoT, smart home, smart property, smart cities. Saw a big headline, State Farm put $1 billion plus into ADT. And that's perhaps a big landmark for changing the industry's perceptions, right, of what carriers are doing in the space, right? For so long, it seemed like nothing, and then all of a sudden, State Farm, the giant, puts $1 billion in. How are they financing IoT risk mitigation packages? And if you look out in the future, with ADT, is this deal really a catalyst for a permanent trend? Or is it just a headline grabber and a year from now, nobody will remember it? Rahul, we'll start with you again.
Yeah, well, hopefully not. $1 billion is a lot of money. I think, so there are two things here, and I know there are folks in the crowd that this may resonate with. There's a broader trend of incumbent insurers, both large national carriers and regional carriers like Erie, starting to invest more, period, right, in innovation. And so I think that broader trend is thinking about how do you partner to, one, stay relevant, but also to think about how to leverage all the kind of the new cool things that are happening to go back to what really matters, which is improving that customer journey, right? And so I think that there was a world, call it a few years ago, where a lot of the big national carriers were leveraging data in really cool ways, and it was a nice differentiator. It was quickly becoming kind of market standard, but you could get by still being analog and kind of slide under the radar. And I think now it's no longer a nice product feature or a product differentiator. It's definitely more of a must-have to kind of survive and market. And so as data becomes that one thing that you kind of have to have, I think it's a trend that stays. I think you see other insurers maybe not invest billions of dollars or invest into an ADT, but think about building that ecosystem, right? So you look at ADT and that's protection. Ting was, I think it's like fire safety, right? And so imagine if there's a world where you have the physical security side of it, the fire security side of it, you have water sensors there, you loop all of that data together, and oh, by the way, there's already digital platforms that exist that can probably come in at point of claim, set up FNOL, come in at point of FNOL, dispatch a service provider, run you through that process, and maybe even pay out the claim. And you put all of that together, it's not there today, but put that all together, and you get a pretty seamless customer experience, right? So I think that it only continues and actually probably gets bigger as we go on. Are they all going to be big billion-dollar deals? No, but they're probably more, startup-based investments and things like that.
Okay, Wayne, how do you see it?
I mean, it certainly grabs headlines when you tack on $1 billion investment amount. I look at it a little bit counterintuitively. I think it's more actually defensive than bold. It's kind of the same old, question of, are the incumbents going to adopt technology and new IoT usage-based models, or are the tech-first players going to figure out insurance? And so, ADT obviously has a big footprint, big business, ubiquitous name, but their competition is now Ring and Amazon And when you see a product like a drone that can fly around your house and see if there's any motion, see if there's things happening in your house, whether it's using a infrared type sensor to see if there's water damage that you can't see with your eyes, and you don't need to get an inspection, you don't need to do any of those things. The question is, can an insurer wrap the house before a company like an Amazon, which has your door activity with your doorbell, your internal activity on your Wi-Fi network with Eero, and everything else that's happening in your house? They know if you're there because you probably order a package a week. And so they know a lot. And the question is, can a company like State Farm get to leverage technology first? Is ADT the right bet? I don't know, but State Farm's pretty smart. I'm sure they won't lose $1 billion.
Jimmy?
Yeah, I'd build on what Wayne said. So actually, to add a bit of perspective, we just in our latest funding round, IKEA invested in our business, and I think actually this is part of the same trend in the way they're thinking about it. It's not necessarily, hey, I must have this IoT asset. I think it's a reflection on the way insurance is changing as an industry. So I think going are the days of, hey, I'm a consumer or a business owner, I go into my broker, I buy my insurance, and that's like the neat little world that's wrapped up between, it's just my insurance world. I think a lot of other big, massive corporates are looking at the insurance market and they're licking their lips. They're going, hey, this is a massive market, it's kind of sleepy, like there's not been much innovation, way less than in lots of other industries. Isn't there this amazing thing where, particularly people like paying monthly premiums, I basically have an interaction with the customer every day. I know when they move house, like basically all these other brands are looking at all of this data that the insurers should have and saying, that's amazing for my core business, I want some of that. And I think these kinds of deals are born out of that changing dynamic in the industry where it is going to be integrated more in different places and everyone's just trying to work out what that is right now. But I think there'll be a lot more deals that look something like this coming.
Okay, I'm going to stay with you, Jimmy, because we have a special question that we want you to answer, but it's about the difference between the US and the UK. So from Shakespeare, know thyself, right? But if you know thyself, how do you know thyself? From knowing what works and what doesn't in other places. So in the US, 78% of smart home consumers are willing to share their data for an insurance purpose, and upwards of 70% said they would invest their own money to purchase the devices. But in the UK, only 39.7%, so 40%, about half of home insurance policyholders with smart home devices would be willing to share. Why the difference? What do you sense?
So I think there's a couple of things at play. One, in the UK, trust for insurers is way less. So there's no brokerage market in the UK. Everything's direct. And as a result, I think people don't feel like they have any real relationship with their insurer, and they just don't want them spying on them. So I think that's really, the Brits are classic cynics, right? So I think there's like a cultural thing there. The other thing that's really just different about property in the UK is the average premium. So for $200 a year, you're going to get your homeowner's coverage with like everything all in. And that does create quite a different dynamic because one of the reasons I think telematics and IoT has been so impactful in the car insurance industry, which we've had in the UK, is the average premium is $3,000, $4,000 for a new driver. You put a telematics device in there and you can charge $1,500. That is just worth it. I'll give up my privacy in return for this massive thing. Whereas in property insurance, and it is definitely, even in the US, going to be much more marginal. But in the UK, it's like, I give someone a 10% discount. They're like, it's $5, $10, who cares? For all the giving up of privacy. So I think, it is interesting that the model probably in our view is just not going to work in the UK. Whereas, maybe there's a chance it's going to work here.
Okay. Thank you. That's just shocking to me how it can be profitable at such a low rate. Okay. Next question. Should we expect the same frequency and severity outcomes in fully occupied environments or does occupancy result in a more U-shaped loss curve where fully vacant and fully occupied homes perform more poorly overall than versus homes that are not vacant? So what I'm trying to play on here is the trend that we've seen in professionals working from home more and more. And I think that as we move into this return to work phase, there's still so many people that are not going back and so many companies that are accommodating. So you have more and more people at home all the time. Is that good for risk prevention, bad for risk prevention? And could usage-based insurance or UBI and property help? Jimmy, you also talked about that at first, where you have a certain type of demand for special customer situations. Can you address this first again?
Yeah, of course. So we also have a reasonably unique perspective on it from just covering a lot of properties, right? So hundreds of thousands of properties through the last couple of years. And in the UK, probably had more extreme lockdowns where people were working from home in a quite serious way, but then also switched them off quite hard. So people have generally gone back to the office now. And what we saw in terms of actual sort of claims trends from that was actually when people are at home, like obviously no burglaries, which is kind of obvious, but then loads of accidental damage. So people spilling coffee over their laptop, or so like basically the same loss ratio more or less, but from different kind of things. I think the thing that was interesting and does definitely interact with IoT is severity on large losses down because people spotted it earlier. So you're at home all day, you notice when the pipe is leaking after 20 minutes, not after 10 hours. And I think it's interesting that IoT could play a role basically recreating that. And from our point of view, that really has a massive impact. So escape of water is our biggest loss. The difference between, hey, I'm going to replace like this one corner of your kitchen, the carpet, versus I'm going to replace your whole kitchen because it's flooded and the ceiling's given way and the whole thing's collapsed. So if your IoT device can call you up at work and say head home, then certainly we think that would be pretty impactful. But yeah, it'll be interesting to see how things play out here as well.
Wait.
Can't talk too much about the losses, but I can speak from personal experience being still at home, working from home, and having invested my own money, back to your prior question, into water sensors under every sink and beside every toilet in my house, have definitely prevented a pretty big loss just by being at home and hearing the announcement that there's water detected, getting the alert on my phone and being able to be there. And it must have been 2 minutes as opposed to trying to figure out, do I really need to go home right now?
Yeah.
So maybe I'm just paranoid about it, and that's why I work in insurance, but certainly a customer, if that makes sense.
Oh, I am too. So I acknowledge and agree. Okay, Rahul?
No, I mean, not much to add. I'd agree in general. I think the personal anecdote here is we just bought a house, and I have yet to put the sensors in, and I'm paranoid right now about what's going on at home. And so I think it's definitely needed. But oh, by the way, wouldn't it be cool if, let's say, hopefully nothing's happening, but if it does, I can actually shut the water too, right? And so that I don't go home to a flood, even though I did know it was there and there was nothing I could do about it. So no, I do think I'd agree with everything that was just said.
I think it's interesting just because we work in the industry, we have the data.
Yeah.
So every day I see someone losing half their house from escape of water claim. So I'm like, yeah, just from a personal point of view, would want to invest in that. But like your average consumer, if you ask them what's the biggest home insurance loss, they'd probably say burglary or fire or something else. Whereas actually, no, it's water leak. So I don't know whether that changes as well. Like somehow people learn a bit more about that. I think the industry's been very cagey about its data on this stuff, and maybe we should share a bit more about it. But
yeah, they've been cagey about the data, but not about the devices. So we're going to turn now to actually what sensors and other IoT devices are being used. Are you seeing more of? Are you interested in? I noticed just walking the floor that this year there seem to be fewer device companies here than in years past. On the other hand, I have Ting's flyer here, right? And I think one of Discovery or another Decadu, I think, on the health side, right? But in property, I was surprised to see fewer companies here this year. On the other hand, I think a Ting device is a breakthrough, and we know that State Farm invested in Ting, right? So on the one hand, they're on the big brand side making the investments, and in the startup zone, that is having, or could potentially have, a huge impact in the case of Ting on preventing electrical fires. Their headline number is they've prevented 2,000 fires and over $1 billion in damage so far, right? That's a lot, and that's exactly the type of solutions we want to see. So what are you seeing now, and how has that changed over the last few years? Wayne, I'll go back to you first as a power user of IoT devices.
Yeah, I obviously think Ting's a pretty impressive product. Obviously, lots of people have seen, Moen's water shutoff valve that, a pretty handy person or, even just a plumber with a little bit of time can install. I think it's going to be, an interesting time because there's not too many obvious next steps. Like, there's not a lot of low-hanging fruit. In certainly the big losses around fire or around water, if you can cut it off at the source, that ends. But to things like burglary and other types of damage, it'll be interesting, and I think we'll see a lot of that more from video surveillance. I think there was a big missed opportunity for Nest, with Nest cameras in the home. And so I think you're going to see people coming more from that angle on motion sensing, and then even down to the UBI component. How many people are in the home, when are they coming and going, and usage. And these days you can put one camera and count the number of people, how long are they there, all of that stuff. And I think that's going to be fascinating. And similarly for carriers that are multi-line, there's significant crossover. If you've got a connected garage door, you can start to back into some data about vehicle usage. You can also certainly see door motion sensing, and then I'm particularly excited about commercial detection with things like the Boston Dynamic Spot dog that can walk a floor. You don't need security to be there 24/7 to prevent a burglary in a warehouse. You can have either a camera or a roving, spot. Hope they don't mount anything on top of that spot to stop the burglar, but that's all in the future.
Jimmy?
Yeah, I guess just to bring a bit of European flavor, I think one of the challenges to device adoption in Europe in general is the age of properties. So my personal house is 250 years old. So it's protected by the state. I can't edit anything. I can't really drill holes in the wall if they can be seen from the outside. So I think one of the things that's interesting that I've been talking to people about locally is, can you do more generalist things like a camera or sound device that can almost like uninvasively do the work, that doesn't need to be fitted to a pipe, or you don't need to like rip things out of the house. So I think, from a European perspective, everything's smaller, right? So we're all squished in, and there's no space to put things in pipes and stuff. So to globalize anything that you make here, you do need to think about that different sort of property construction.
It's interesting. So I think if you think about commercial only, I'd say cameras, motion sensors, things like that totally make sense. I wonder if within single-family resi or personal, if people end up being okay with a camera in the house as a part of their insurance policy. I certainly wouldn't be, and so you can tell me how much it's going to save me. I don't really care. It's the same kind of reason I don't sign up for any telematics in my car. I know how I drive. Probably bad risk. I don't want anyone to find out. But on the property side, on the personal side, I think again, if you could have all of the sensors that exist today, so water, electrical fire, you could put something on utilities, of course, maybe perhaps just in the US, but if you see utility usage spiking at really weird intervals, can you back into, oh, maybe this property is actually being used for Airbnb a part of the time, right? Do I underwrite that differently? And again, so I think that's where you start really getting into the meat of real like usage-based insurance, right? Versus just all the maintenance that we've been kind of talking about. I think there's a world for it. I think the tech already exists. It's all out there. It just depends on, frankly, whether the insurers actually have the underwriting capacity now to ingest and then make sense of the data and actually put it into an underwriting model, frankly.
So there's one amusing anecdote on that relates to what you're saying. So smart meter rollout for energy has been really big in the UK. So 80% of properties now have smart meters. And one of the things that the energy companies are working with the police on now is weed farms in houses. And the smart meter picks up just huge spikes in energy usage because they've got lights on all the time, which is not legalized in the UK. Yeah, I guess it'll be fine.
It's not Colorado.
But like, again, it's a sort of interesting use case of like the energy company now has this really rich data that it can do things with, and it can share with, share with the police, but it can also share it with you to do interesting stuff with.
There's actually just one more side of this that I was having a pretty interesting conversation today, actually, where there may be a world where you can actually incentivize policyholders to go ahead and, let's say, walk around the interior of their property or the exterior of their property on their own time, right, and sell that data. Whether if they are uninsured, you just give it up to your insurance company and maybe you get your discount or whatever it is. But if not, you can maybe sell that data, and what you're saving the insurance company is you're saving them the time of perhaps sending out an adjuster to the property to go ahead and see what's going on with the outside. Certainly not getting inside, but you're providing more of that data up. And so that may be another way to, no sensors, nothing to install, but really just engaging your insureds.
Yeah, I like that. We just, in the session before, Verisk was here, and one of the things they showed was their interior scanning app, and we noted earlier in the year that Flyreel was acquired by LexisNexis, so the big data companies are in insurance and P&C are there now as well, and getting more advanced every year. So even if internally you can't do it, you can rely on your data provider partners increasingly for those services. Okay, we've got one more question, but before we get to it, we've got 5+ minutes. I want to see, does anyone in the audience have any questions? Because I like to make sure we get those. I don't see any on the app. Do we have any questions? You can shout them out. Just raise hand. Here we go. Yep. Yeah, the question was, hey, this is great, but how great is it if my rates keep rising every year, right? Okay, so that's a great question for the panel. When are we going to see the discounts and savings equate to real discounts and actually lower premiums? Thoughts?
Well, it's interesting the contrast with auto, where actually mostly the telematics data in auto is used to distinguish as a risk characteristic between good and bad drivers. It's not actually making people drive better. Like, I know that's what people sell, but actually the reality is that it's just like you were saying, the fact that you will let someone watch you drive means you are a better driver, and the fact that you know you are being watched is you're a more careful driver. So it's not, kind of, as you say, it's not actually making the insurance cheaper, it's just helping some people who are mispriced be more correctly priced. And that is an interesting difference between IoT in auto and IoT in home. Like IoT in home is really focused about trying to reduce the cost. I think the adoption has to be pretty big before it makes a difference. So I think I mentioned earlier about 40% of our claims are from escape of water. If 5% of our customers put one of these devices in, it's going to save us, maybe 5% on the loss ratio. Maybe you'll get a 5% discount, but it's going to take like 5% of our customers is like a lot of people to adopt it. So it could have to be like a lot of adoption before it really brings the rates down.
What about from Sher's perspective?
Yeah, I'd say there's obviously a latent effect between when the tech exists, like as you said, it's already here, when it gets adopted at scale, and when we're going to see that trusted by an underwriter and adopted as a true fact that this can be verified, that it's in use, it's on, the data is happening in real time, which would be something that would be needed to figure out your pricing as opposed to give you a discount later in 12 months of historical. You've had your device connected, it's been on Wi-Fi, they've been able to see their data, and they can give you that discount.
Not your friend's home.
Yeah, exactly. It's in the right home, all of that stuff. And then, it may be one of those things that just like, new home builds, which don't happen in the UK that often, but maybe here in the States, needs to be part of the code, just like, sprinkler systems are part of the code in many markets these days. I think we're going to see things like that have to happen before, it ends up having an effect on price. So long story short, I think there's more pain in our home insurance premium to come before anything starts coming down.
Yeah, I mean, that could drive adoption, right? Like water shortages are going to be the next couple of decades. So
Exactly.
not an insurance point of view, but just the government just goes, hey, everyone, you now need one of these things that cuts off your water. If you start leaking, it's the law. Like that could happen.
Cool. Yeah, I think short answer is it's going to be a while before you see a discount. I think that's what everyone was saying. But I think adoption's a part of it. I think obviously customer education's another side of it. I think that once you have the leak, detecting it's one thing. But what if you could prevent the leak, right? So in conversations with some insurers, they were saying that's all fine and good if you can actually stop, help me not pay out the claim at all because it was preventative. You had, for however reason you realized that there was maybe a drop in pressure or something, and you went and you fixed the pipe or retrofitted it before there ever was a leak. That's bigger savings on the insurer, and then hopefully with adoption, bigger savings down to you. At least that's what they think.
Yeah, and I can tell you from personal experience in a partnership we did with Guardian, which is one of the shut-off device companies. Some insurers are happy to give the discount right away as soon as they learn that there's a shut-off and leak protection. Most are still not there yet. So, in line with another Verisk statistic from their presentation, shopping is up, in homeowners and auto, right? And that's a perfect criterion to specify in your shopping journey, and it's easier than ever to shop. I won't tell you who to shop for, but there are plenty of great comparison sites out there, and you can specify, if not in the digital experience, then with a phone call. Okay, any other questions? Yep, right here. Okay, the question is, does UBI inherently improve risk prevention or management and energy, right? We'll stick to the first question. So what does the panel think? Jimmy?
I think commercial, we haven't talked about commercial loads,
right?
But if you're a business, you're happy to have a camera on all the time. You're happy to put sensors everywhere. You're happy to track everything. And the premium is massive. So there's some big prizes there. That feels like that will happen first to me.
Okay, I'm sorry to cut us off, but we are at time. So we'll be up here in the front if anybody wants to come on up and chat with us. And we thank you all so much for attending. We'll see you next year.